Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a filing from RYVYL, and let me tell you, this one's a roller coaster, complete with debt, SEC investigations, and a potential sale that could shrink the company by a huge amount. It's like watching a financial thriller where the hero might, well, not exactly win. So what are we about to look at? This S1 filing is to offer a whole lot of units which has a chance of raising $20 million. Whether this is the company's saving grace or just a delay of something bad remains to be seen. Before that, if you are excited to hear a complete breakdown straight from the SEC documents, then make sure to click that link button for more updates. Also, make sure to join our amazing community on Discord where we talk about all the stuff relating to corporate filings, link below. Let's dive in, but first, a very important disclaimer. They straight up admit our financial situation creates doubt whether we will continue as a going concern. Basically, there's a big question mark over whether they can stay in business. This is mostly in the US segment since the EU segment is being sold. RYVYL have entered into a securities purchase agreement. It's one thing that makes the company doubt its ability to stay afloat. They're selling a big piece of the company, their EU business. They expect it will close in the second or third quarter. After that, they expect to be significantly smaller, 70 to 80% smaller in terms of revenue. This could be a good move if you cut off a dying limb to save the body. The sale also makes them unable to repatriate profits from their operations in Europe to cover some of their critical operating expenses in North America, as a result of which management has determined that its cash balance in the North America segment as of March 31, 2025 will not be sufficient to fund the segment's operations. That is an ouch from the past that keeps on giving, creating a need for more cash. On a brighter note, the company is looking into an enhanced plan that involves diving into the digital asset space with a new acquisition. But hold on, this plan needs $10 and shareholder approval with no guarantees of success. Now let's peek at the numbers in the capitalization table to see the value of the company by looking at the pro forma as adjusted column after this offering. So if they are successful, cash and cash equivalents will be a healthy £95.79 million, but a whole $19 million will be just the stockholders' equity. Still not bad compared to before where it was actually negative. Now back to the bad parts. Being a smaller reporting company is not exactly something to brag about. That means the market value of the common stock is less than $250 million. However, being a smaller reporting company has its advantages. You get certain reduced disclosure obligations regarding executive compensation. Prior to its transition and loss of revenues in North America segment scroll, the business is not doing well in North America due to banking compliance issues. In short, they stopped processing credit card payments on their Quick Card platform because their processing partner didn't want to deal with payments for cannabis merchant deal with payments for cannabis merchant deal with payments for cannabis merchants. That's kind of the bread and butter there, and the app-based version didn't pan out. Now they're trying to license the platform, but again, this revenue isn't expected until late in 2025. What is their strategy during these hard times? It involves enabling seamless cross-border transactions and relying on their dual-sided platform. With shared technology, they could reduce development costs. This plan requires adherence to both regional and international standards. Let's see how the competition plays out. The payments technology industry is absolutely packed with big players like PayPal, Stripe, and Square. RYVYL is a minnow in this ocean. Not so fast, there are more regulatory problems. The SEC is still poking around about those blockchain claims and the whole Quick Card and cannabis thing. Basically, did RYVYL mislead investors about their tech and who they were really serving? To clarify, their blockchain ledger is not viewable by third parties, so I'm not sure you can call that a public blockchain. Now, let's get into those risk factors. Top of the list is the big one. Our financial situation creates substantial doubt whether we will continue as a going concern. Always fun. RYVYL have entered into a securities purchase agreement. Scroll right after that, they talk about how selling their EU business, which represents a substantial chunk of their current operations, is a risk. It's a material subsidiary, so the business gets smaller but may get focused. Scroll, there is no cop assurance the company will be able to successfully enter the digital asset space. Scroll, even we have the risk that the company won't be able to $100 million needed to make it happen. The shareholders could say no to the acquisition, or that they will get the $100 million needed to make it happen. The shareholders could say no to the acquisition, the increase in common stock, or the potential reverse stock split. Then there's also the classic, what if our key people leave? Because yeah, that's a legit worry too. There are also external risks such as severe capital markets disruptions and economic uncertainty. Ah, yes, this old friend. They are looking at securing money over the next 30 months, but it may be too far off. Finally, the business risks include their stock being delisted if they can't keep the share price above $1. That makes it hard to raise money if you're trading over the counter. Scroll enhanced business plan and digital asset, clap low scroll. And finally, it mentions its enhancing business plan. With the enhanced plan, the company wants to get existing technology to support its digital assets. But as discussed before, there are no assurances the company will close the acquisition. Okay, so what is the risk of all of this? The truth is, the company has major challenges ahead. They are trying to sell their revenue producing segment to get more cash for the risky North America stuff, which still needs time to produce. They need the $20 million to make it happen. Scroll security ownership of certain beneficial owner. Scroll's quote lifts our breakdown of RYVYL's not so uplifting filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time, and remember, always read the fine print.